We had one client that we were able to save over $52,000 by incorporating 5 strategies, and we were able to help him implement those in less than a month. What to look for in an accountant for your business? I get asked this all the time as a CPA. Hey, what should I look for in a CPA or tax preparer? There's really 2 different types of relationships you can have with an accountant, and the first is by far the most common. That's annual tax preparation, and that's what most small businesses do because that's, hey, y'all have to file your taxes. I recommend going to a certified public accountant or an enrolled agent, and both these certifications require testing and licensing procedures to ensure, at least on a test, that they've demonstrated basic tax competency. They both have rigorous education and ethics requirements. They can both call the IRS or other taxing agencies on your behalf and resolve issues for you. If you're not a CPA or an attorney or an enrolled agent, they cannot call the IRS and resolve issues for you. So CPAs are licensed by the state in which they practice. EAs are licensed directly by the IRS. And they can prepare and file your taxes and keep you in compliance with the IRS, provide tax saving guidance every year when you come in. Personally, I would not use a tax preparer that didn't have either one of those certifications. I happen to have both those licenses. But there's really 2 different types of income tax services you can get when you go to your accountant. You can see your accountant once a year at tax time. They can get your taxes filed correctly, give you some ad hoc tax advice once a year. But to some extent, that's just kind of keeping score of what happened last year. You can get tax advice, but sometimes it's a year too late to do anything about it. They're just telling you what happened last year and what you owe. That's reactive. There's a much better option for business owners, in my opinion, and that's for them to have a relationship with the accountant where they have standing meetings scheduled for each quarter or each month throughout the year. And I think most business owner clients get much more value from that relationship with the accountant, where the accountant prepares a quarterly analysis for the client updated throughout the year with updated numbers each month or each quarter. And what I prefer is being able to offer a tax plan that is updated each month or quarter. And that's much more than QuickBooks. We can look at the business's cash flow, the accounts receivable, the debt balances, and we can offer all advice in real time that's current within that 3 months. We can look at your numbers and see if anything's getting out of whack, almost in real time, so you can act quickly if something in your business is making a ton of money or costing you a ton of money. And you get advice that can really help with the business while there's still time to act. So we had a medical practice owner and helped him work through finding a particular area of his practice that was generating only about 1/4 of his top line revenue, but more than half his bottom line profit. So he decided to concentrate just in that area. And he quit doing low value procedures. The next year his bottom line profit was 4x what it had been. So his take home pay went from about $110,000 a year to $450 in a little over a year with working no more hours. But he was able to granularly look at the data that we were able to give him and figure out that, hey, specializing his practice into that most profitable niche he could was very profitable. So if your income is way up, we can look at money saving tax planning vehicles like deferred comp plans, healthcare options, 401k, SEP maximization, accountable plans, vehicle purchases, and other depreciation items like big equipment. So the value in able to do this with the client is being able to present a written tax plan, laying out various tax saving options, updated quarterly with fresh numbers. And what that does is it can help maximize both the business financials and minimize taxes. So things like your big business structure figure into this too. At a certain income level, switching from a sole proprietorship or a partnership to an S corp can save the owners over $20,000 a year with just that move, just that one thing. So if you want to sell a stock or a property, we can advise on capital gains or 1031 like kind exchange. And you don't get that by just seeing your accountant once a year and having that annual interaction. And the difference between an active or reactive relationship with your accountant is big. So if on an active relationship, doing the tax planning every month or every quarter combined with doing your numbers, they're working 6 to 10 or more hours each month or each quarter for you, rather than just 6 or 10 hours each year just doing your tax return. And the active advice is worth it, in my experience, for business owners with a top line revenue of $1 million or more. And some accountants just do income tax preparation, and they're not really all that set up with the proper software to analyze all the tax savings advantages. There's hundreds of different concurrent options that you can kind of have to play with to figure out what's going to save the most tax. We had one client that we were able to save over $52,000 by incorporating 5 strategies, and we were able to help him implement those in less than a month. But we wouldn't have known that unless we were contracted and paid to go through that in-depth analysis to do so, because that just doesn't really fit into the narrow engagement that's just a simple transactional reactive tax return. Another difference is cost. So just like with an attorney or a doctor, with the more you want an accountant to do, the more it's going to cost. So quarterly financials with an updated palette of tax saving options and actionable items, that'll usually take as much time or more to prepare than an annual tax return, and that's per quarter. So I'm not just talking about doing your QuickBooks here, but analyzing your personal and business items for overlap. Things like IRAs, Roths, 401s, donor advised funds, health savings accounts, home sale exclusions, 1031s, investment tax loss harvesting, education credits, and more. So there's a whole bunch more, a whole universe of different options that we're looking at other than just income and expenses, like just bookkeeping. So you have to ask yourself, as a business owner, would you pay $5,000 or $10,000 a year, but maybe be able to save $50,000 or more in taxes? I would. It depends. You do get what you pay for. So for a business with over $1 million in revenue, I think it's a no-brainer to use a CPA or enrolled agent firm that specializes in active tax planning. And they're already dialed in so they can do your tax return next year. On the other hand, if you have a side gig that only grosses $40,000 a year and you're profiting $10,000, it's probably not going to be worth it for you to pay $5,000 or more for a tax plan when you only owe $3,000 in tax. It just doesn't make sense. If you own a more simple business, you might just be fine with going to your accountant once a year and then just, hey, see if you could schedule a mid-year consulting meeting for an update. And we still offer both types of services to our clients. It just depends on the client's needs and the client's financial sophistication of what they want to do. But generally, the more the accountant's doing, the more he can save you. Got any questions? Leave a comment below. Thanks for watching.